Alright, let's be real. Everyone keeps talking about Nvidia, Apple, and Tesla like they're the only tech plays in the market. But while everyone's been chasing the hype, a few underrated tech stocks have been quietly stacking gains this year. These names aren't too flashy, they're not over news headlines, but they are putting up solid numbers, real earnings, real growth, and in some cases, real dividends. So today, we're breaking down 3 tech stocks that are actually holding strong in 2025 and still have room to run. We're talking about an AI software beast, a semiconductor dividend powerhouse, and one of the most stable names in big tech. If you want exposure to AI and tech without chasing the next bubble, pay attention to these 3 stocks that I'm about to show you guys. First up, Palantir Technologies. This stock's been controversial for years, but 2025 has been a redemption arc. It's up roughly 130% year to date, and it's finally showing investors it can back up the hype. Palantir's artificial intelligence platform is being used by governments and big corporations to make real world decisions with AI. Unlike a lot of other AI names, Palantir is profitable, cash flow positive, and signing new contracts left and right. CEO Alex Karp said it best: AI demand in the real world is finally catching up to the hype. That's exactly what's happening. They're no longer selling dreams, they're selling tools that save companies money. And if we go ahead and check out the valuations for Palantir, we can see that they don't provide a dividend yield yet, which isn't too bad compared to other stocks. Like Amazon doesn't provide a dividend, but Amazon is also a lot more reliable. Like, look at this price to earnings ratio for Palantir. I would say it's a good stock because it's a government stock, and governments could pretty much receive unlimited funding, US government companies, that is. And I'm just thinking that although the price to earnings ratio is pretty high, they have strong government contracts, they have good commercial growth expanding first, and they're still volatile and politically tied. They're tied up with the government. That's always going to be political. And honestly, they're still volatile because this is a very high price to earnings ratio that I don't really like. Their 52-week low is $38 and their 52-week high is $190. I used to have a bit of Palantir, but I sold out of it. I remember I made like 156 off of I believe it was like $300 investment. So I would buy this stock if you want to buy for the future, because companies and corporations that are tied in with governments always seem to thrive. I wonder why. With all that Palantir talk out of the way, that brings me to my second stop, Broadcom. Broadcom is up about 43% year to date, which is very, very good, and it's driven by its strong position in networking chips, the backbone of AI data centers. When Amazon, Google, and Microsoft run their AI models, Broadcom's hardware is often what keeps that data flowing. And the part of Broadcom, it's not just a growth play, it's a dividend machine. This company's raised its dividend every single year for about a decade, going from 0.35 cents per share in 2010 to over $18 today. That's serious growth. If we go over here and check that out, we can see that they offer a 0.7 dividend yield that they have been hiking for a decade. And their price to earnings ratio is a bit high. I don't like to buy into companies that have over a 40 PE ratio, but with Broadcom, given the logistics that I've told you guys, I think it's a pretty solid buy for the next years to come, especially since this company's probably not going to go anywhere. And going back to the dividend yield that Broadcom does pay out, you can see that their earnings have grown throughout just the past year, just looking at quarter 2 of 2024, and we're about to see quarter 4 of 2025. So that's pretty dang good, especially since Broadcom doesn't rely on hype. It relies on contracts, consistent margins, and one of the strongest management teams in the semiconductor company. The best way I could put this stock philosophy to you guys is that if Palantir is the brain of AI, Broadcom is the body. The physical engine keeps it all running. And for our third and final stock, guys, we've got Microsoft. Even after a $1 trillion rally over the last few years, this company just keeps finding new ways to grow. 2025 has been a slower year for most mega cap tech companies, but Microsoft still managed to rise around 10 to 12%. And just to check, to go to the year to date of this year, it's higher than 10 to 12%, being 21.5% year to date, which is damn good for a stock that keeps on growing and finds new ways to grow every year. And the secret to Microsoft's gains year after year is AI integration across everything from Windows and Office to their new Azure cloud services. Copilots is becoming a part of everyday life. Copilot is a new AI protostructure that Microsoft is implementing in their company, and it's helping people write, code, and work faster. That's not a gimmick, that's very sticky revenue. Plus, Azure is continuing to grow around on AWS, and that cloud dominance fuels their entire ecosystem. Microsoft also has steady dividend growth, it's deep AI integration, and they're not cheap. The quality is rarely is. The quality of this stock is great. Like, as you can see, I own about $1,800 worth, have a $300 return in there, and my average cost, I started buying at like 390, but it's gone up to about 425, and I have 3.5 shares for the stock. And it's about as expensive as VU or SPY. It's an ETF price pretty much. But as I said, the quality of the stock is rare, and it's very rare to find a company that grows their CAGR after continuing to grow it for decades. So if you want safety, AI exposure, and steady compounding, Microsoft's the play that keeps your portfolio balanced. I can say that personally from experience. So to sum it up, Palantir's your highest upside AI innovator, Broadcom's your dividend-rich infrastructure play, and Microsoft's your stable tech foundation. These three cover every angle of the AI wave: software, hardware, and cloud. None of them are meme stocks, none of them are hype trains, just solid businesses doing well in 2025. If this breakdown helped you, hit that like button and drop a comment with which tech stock you're holding this year. And if you want to see how these compared to dividend ETFs like SCHD or JP Morgan, check out my last video in the link right here. I hope you guys have a good day. Take it easy. Peace.